Hello and welcome to Personal Finance Trends. Today, we are discussing an important topic that affects everyone choosing the right health insurance in India. With so many options available, it can be quite confusing, but don't worry. We are here to simplify it for you. Before we begin, if you haven't subscribed to our channel yet, make sure to do so. We have a lot of valuable content lined up that you won't want to miss. We will be covering this topic in a 3-part video series. This video will explain the different types of health insurance policies, who they are suitable for, and how much coverage you should opt for. The second video will focus on how to select the right health insurance plan. The final video will cover the do's and don'ts while choosing a policy. Make sure to stay till the end of this video, as we will discuss an important aspect of corporate health insurance and whether you should rely on it or get a personal policy. Health insurance is a crucial financial tool that protects individuals and families from unexpected medical expenses. Among the various options available, individual health insurance and family floater insurance are two of the most popular choices. Understanding their differences will help you make an informed decision. Individual health insurance policy is designed to cover medical expenses for a single person. If an individual is hospitalized, the insurance provider will cover expenses up to the sum insured. Premiums depend on the insured person's age and the coverage amount. For example, if a family of 4 chooses separate individual policies with a sum insured of 2 lakhs rupees each, then every member has their own limit of 2 lakhs rupees. However, this has certain drawbacks. Limitations of individual policies. If one family member faces a medical emergency requiring 3 lakhs rupees, their policy will only cover up to 2 lakhs rupees. The remaining 1 lakh rupees has to be paid out of pocket. If the same person incurs additional medical expenses within the same year, they won't get any further reimbursement since their policy limit is exhausted. A family floater policy provides a shared sum insured that can be utilized by any family member. The premium is primarily based on the age of the eldest insured member. If a family of 4 opts for a floater plan with 5 lakhs rupees coverage, any member can use the entire sum insured. For example, if one person is hospitalized and needs 3 lakhs rupees, the policy covers it. Later, if another family member incurs 50,000 rupees in medical bills, it will also be covered. The only limitation is that the total claims within a year cannot exceed the insured sum of 5 lakhs rupees. So, which one should you choose? If you are young and healthy, a family floater plan is more cost-effective. If a family member has pre-existing conditions, an individual policy may be better for them, while the rest can opt for a floater plan. Avoid including elderly parents in a floater plan, as their age significantly raises the premium. A separate individual policy for them is usually a better option. Now, on to the most critical point. How much health insurance do you need? Determining the right coverage amount depends on various factors. If you have pre-existing conditions, opt for higher coverage. Older individuals should have higher coverage due to increased health risks. If there's a history of critical illnesses, consider a higher sum insured. In metro cities, healthcare costs are higher, so a larger cover is advisable. With rising healthcare costs, a coverage of at least 50 lakhs rupees is advisable. This can be structured using a base policy plus super topper policy to keep premiums affordable. For instance, a 50 lakh rupees family floater policy for a 35-year-old spouse and child may cost around 30,000 rupees annually. Premiums increase with age, and some insurers have periodic premium hikes every 4 to 5 years based on age bands. Insurance companies offer various add-ons like daily cash allowance and ambulance charges, but these increase your premium without adding much value. Stick to essential coverage and avoid unnecessary riders. Should you rely on corporate health insurance? Many employees depend solely on their employer-provided health insurance. While corporate policies offer basic coverage, recent changes suggest they are no longer sufficient. Employees may need to pay 10 to 25% of hospital bills. Some companies are removing parental coverage or asking employees to pay for it. Employers now deduct health insurance premiums from employees' salaries. Some policies impose room rent caps or set limits on certain procedures. Rising claim costs have forced companies to cut down benefits. Why you need personal health insurance? If you switch jobs, there might be no coverage during the transition. Buying insurance after retirement is expensive and comes with restrictions. Many people in their 40s develop health conditions that make it harder to get new policies. Employer plans have room rent caps, copay clauses, and sublimits, reducing claim amounts. Having independent health insurance ensures uninterrupted coverage, even if you switch jobs, retire, or face changes in employer policies. Let's now summarize what we have learned in this video. Health insurance is an essential investment in financial security. While corporate policies are beneficial, they come with limitations. It's best to purchase a personal health insurance policy early in life to lock in lower premiums and broader coverage. If you have corporate insurance, use it for claims, but also maintain a separate personal policy for long-term protection. That's all for today's video. Make sure to watch our next episode, where we discuss how to select the right health insurance plan. If you found this video helpful, don't forget to like, share, and subscribe to our channel. Stay safe